Right,
Okay.
let's see what happened over this Easter weekend, and quite a few things happened. Let's, before we dive into data and everything, let's go over to some of the headlines, some of the geopolitics, and I'll start with geopolitics again. It's not a pleasant subject. We know that nothing is actually going better than before. We had the Taiwanese president over in the States. We then had the pretty fierce reaction, was expected in a way, but it is pretty sizable, the reaction of China doing live drills of encircling Taiwan, sending plenty of ships and aircrafts over the median line, bombing some desert islands somewhere around there as well. So the reaction is pretty strong. Macron and von der Leyen's visit to China haven't sorted anything out. By the way, Macron, I don't know what's got into him. Perhaps he was too happy that Airbus got some airplane orders, and then he didn't find anything better than to start to criticize the way the US and other allies were handling the situation, and he said that Europe shouldn't be handling the same way. So he didn't make too many friends there with his comments. That about the China issues. The rest, well, Russia and Ukraine is still going on. Nothing really has changed, although both sides were seemingly wanting to discuss some points, but none of them is willing to discuss before they have their own victory. So we should call this a status quo of the Easter weekend, unfortunately. So there's a bit going on left and right as well in the Middle East. But let's move over to some other stuff. Biden is in the UK this week. He is coming to remember the 25th anniversary of the Good Friday Agreement, but we've seen in Northern Ireland already some, how shall I say, some unrest, and remains the question whether how it will go tomorrow when him and Sunak are in Northern Ireland there. So keep an eye on that one as well. Some more unfortunate events in geopolitics. And let's move over to more market-driven comments and news. So first of all, this week we have the G20, IMF and World Bank meetings all at once. We've already heard from a couple of finance ministers under who the Francis Le Maire came out saying that he expects inflation to come off in the second half of 2023. On the other hand, we've got central bankers going over there as well. Rueda, by the way, will be in the US as well from today for all those meetings. We've already heard from ECB the cost saying that ECB isn't done hiking, and that was, I think, yesterday early morning. But the market is paying very little attention, I'd say, to whatever comes out of current comments, because we've had so many of them already that the market is waiting for new facts rather than what the ECBers or finance ministers will have to say. But anyway, keep an eye on the screens. We can have a few headlines here and there. The IMF already said that they were expecting a little bit better growth this year, but that the outlook isn't really brilliant. So they don't expect those higher or high yields to remain in place for very long either. So the IMF takes relatively the side of the markets, let's say. Fed Williams was out also yesterday saying that he sees inflation at 3.75% this year and no return to 2% before 2025. He does say that the labor market is showing a striking development of stability, He then added as well that he doesn't worry really if the market's view is different from that of the Fed. So that's a little bit of a line where the Fed is trying to push back against market expectations for two quick returns or pivots or cutting rates. That was what Williams was hinting at yesterday. And then he dismisses the link between the Fed hikes and the bank stress. I guess that's going to be a 50-50 reaction from people in the market. Yes, they probably had some impact on it because of the hikes, but then on the other side, they also warned early enough for people to try to how shall I say, manage the books in a much more dynamic way than that some of them did. That for the Fed. BlackRock, the CIO of BlackRock, he's regularly on the wires lately. Reader says that the Fed may not need to hike in May as the economy starts to slow and the inflation starts to come off. So that's the view of BlackRock's CIO. So I guess we are we're really in this zone area time where it's going to be a bit limit border. It's a dime on its edge where whether central banks need to do more or can pause. It's a difficult discussion. It's it's difficult to find out exactly what they will do. My base case is still that they will do 25 in the upcoming meeting, but then possibly announce a pause, because that will bring them to 5.25, which is around the what the dots are showing now as a 5.10% mid rate. So Stelios, what are your thoughts about all those declarations on the one side, Williams, the central banks, and on the other side, people like BlackRock who say that perhaps it's enough right now?
Yeah, well, I think the BlackRock CEO might be looking at things from his perspective. So if you're proactive rather than reactive, the Fed, by the way, is reactive, always has been. If you were proactive, the Fed would have started hiking a lot earlier than they did, and they would have already stopped now. And that's how it really should have been done. Now, the question is, the Fed have an issue with their what's the word? Damn it, I've lost my words. Anyway, the credibility. That's it. So they're going to be scared of stopping too early. Having said that, we have tomorrow the CPI, and it's expected to drop more. And if you look at how it's been evolving over the past months, it went from a peak of 9.1, and now we're expecting 5.2. So that within less than a year, it's almost halved, and the trend is still pretty clear to the downside. But the Fed members, they are still a bit worried about sticky inflation, and I think they are going to do a 25 in May. The market is pricing, I think, 80% chance. I think that's pretty much done, unless there's any big crisis or any if we see CPI year on year tomorrow printing at, say, I don't know, 3.5%, then of course I think they're probably going to stop. But I think it's going to keep dropping, but the pace is going to be roughly the same as before. So as I've been saying for many months, I was saying that I think end of Q1 of this year, we're going to see a big drop in inflation. Okay, it's lagging a little bit, but I think the pace is still there. And who was it? Somebody asked me this morning. Oh yeah, one of our Dick Matthews, one of the guys that Blake interviews quite often. He said, do you still think that inflation is going to be dropping in the US? I said, yes, but I don't think it's going to be going to target anytime soon. I think the floor is probably going to be a little bit above that. But to answer your question, I think 25 in May is done. It's 3 weeks away, and it really should be done unless there's any major surprises, of course. Yeah. But we remain in the same situation as we have been for months now, where the Fed members are more hawkish than the market expects, or the market is pricing, and they're trying to convince the market that it's wrong. So far, they have been right. So the market has been readjusting to higher rates, but at some point that's going to stop as well, and I think that at some point the market's going to be right. I don't think it's
Of
going to be
course,
just yet, though.
it's a case of sooner or later you will be right if you don't call for it. Sooner or later you will be right, right? Yeah, I was just looking at these expectations. So we are about 72% for a 25 pp hike and 28% for a pause. And also interesting, if you look at the CPI year on year, imagine that it comes out right there. The 5.2% is very close to where the Fed expects their final rate to be. 5.10 in the middle is
Correct.
too far. And let's assume for a second that we are coming out there, and we know that the core is a bit more of a laggard, right, than the headline CPI. But assuming we are getting those numbers tomorrow, I think that is probably good enough to hike the 25. And then Powell can say, like, look, look at the CPI, look at where we are. That should tell you enough. And he's probably never going to, or he's not yet going to say we're done. But if the CPI comes out at 5.2, then I think that this may be at least calling for a pause, right?
Yes, and when you get to positive real rates,
Yeah.
that's really what they need. And
Yeah.
you're absolutely right. I think that's
Yeah.
going to be a good opportunity for Powell to kind of take a step back and pat himself on the back
Yeah.
and say, we're almost job done now.
Yeah, exactly. We are job done for now.
Yes.
Yeah.
Yeah.
No, that's absolutely a good point. And where am I? Here. Okay, what else do we have? Yeah, noted something down on those commercial real estate. It's in the news. People are worried about it. People are also worried about it concerning the upcoming earnings season. We're starting at the end of the week. I think we are going to see the Q1 results coming out, starting with the big six banks, and the market is going to look at. So the expectations I've seen are right now for about a 10% setback year on year in the earnings. But I think the market is really going to look at signs of what's going on those deposits after the banking problems that we had. What is their forward guidance going to be for the rest of the year? Are they going to cut back on future investments? And it's going to be a bit of a mixed bag, but from that point of view, once the CPI is done and digested, I reckon for once we've had over the past quarters we've had those regular beats, and yes, the market moved, the equity market moved on the back of them, but not really. There was a lot to do with the buybacks and everything. But on the real earnings front and the forward guidance, barring the algo moves and the day-to-day moves, I really haven't seen the equity markets take a peak direction. I think this time, if you get the combination of the CPI and then those earnings, if we really get a slowdown in the earnings, I do think that this time we may see a bigger impact in equity markets. What do you think about that one, Steph?
Sorry, can you repeat the question? Sorry.
Yeah, I said so. We are expecting the earnings to start at the end of the week, right? And the market is expecting a setback, and then they will be closely looking at what the future investments will be, if there are any cutbacks.
Yes.
They will be looking at the deposits coming off in the banks due to the banking stress. So I'm saying, like, the combination between the CPI, once the CPI is digested, and the earnings could actually have a material impact on stock markets this time. What is your...
I mean, like you correctly say, there's a combination of events and a situation which theoretically should be negative for stocks. And we've said this for a while, the general environment, not only the macro environment, but in terms of investment, in terms of employment, in terms of layoffs, etc. It's an environment which is negative for stocks, but we are not seeing anything moving stocks lower. If anything, we are grinding higher. And as I said before, I think more likely we're going to hit 4,200 in the S&P. Also, I've said it before, if you ask me what I think the euro dollar is going to do, I think we're going to see 110 first before we do anything else. So I think this grind has a high chance of continuing higher, and maybe even just because of positioning as well, we might see a squeeze taking us above 4,200 in the short term. I think this will be a good selling opportunity, and it makes a lot of sense to be short. But with this price action, I would be really scared if I was short. I say this every day, and it's true. And with the price action that we're seeing, there just is no dip. Any dip that we see just gets gobbled up straight away.
Yeah, absolutely. And we've seen that on the back of the labor report in the US. So let's come to what data we've got. And I'll move over to UEDA once we've done those US data. So in contrast to what we've seen earlier in last week, the non-farm payrolls came out better than feared. Let's call it that way. They came out in line with expectations. The revision from the past month actually took it slightly above. We've had a good participation rate when we had a good unemployment rate. We did in turn see wages come off, but not really that fast. Okay, I mean, yes, the man on the street, of course, is feeling this, and it's not a pleasant thing to see one's earnings come off. But take the report as a whole, we can't say that it was a continuation of all the other job indications that we had over the past week. So that came in a way as a little bit of a surprise trade, and we said it on the shows. If it shows better than feared, or what may be expected on the back of the other job reports, we could see some move back in the dollar and repricing of interest rates, and that's exactly what we saw over the empty Friday and yesterday. So we saw the first little leg in the dollar on Friday after the jobs report, and then a continuation of it yesterday when the US came back online. In the meantime, we have undone a fair bit of it, but anyway, this report is keeping the dollar bears on their toes, I think, and it's a bit of a. It puts us back in a range, and possibly we have to now look again at what happens tomorrow on that CPI to really get a clue for the next move. I wouldn't be surprised if we range, yes, trading, yes, it will always move, but I'd be surprised if we really break significantly outside of the latest ranges. Moving on, and then I'm going to talk about UEDA. We had a few Japanese data out yesterday, but they completely disappeared into the whoops, I'm looking for my number. They let's say they weren't important at all, because yesterday we had so the official inauguration of UEDA's era at the head of the Bank of Japan. So first of all, we had he had his meeting with Kishida, and then he started to talk in Parliament. He spoke for a while, and as I was already saying a good few times, he does not seem to be the big reformer that people may have expected him to be, or thinking that he would come in and immediately start to change things around. So there were two parts to all of this, because then there was the actual part where he spoke, and he spoke a good few times yesterday in length. And most of the headlines that came out were for him to say, like, we are not going to be in a hurry. The YCC was and still is the right thing to do, the most appropriate thing to do and keep in place right now. And saying that it will take time for things to change. And then came later reports, and apparently some people thought different in some of the translations, but that's the reports or the articles that came out afterwards saying that if wages continue the same way, they may be pushed to act earlier. Now, if wages continue the same way, we have to know that there's only one, and sometimes a second round around September, where the mid-year bonuses are paid out in Japan, where really wages can change. So people thinking that he may act earlier on those wages, I think he told us that he's going to be probably tweaking. I mean, and that's still the base case. They will be tweaking. If they don't tweak now, then I don't understand why Kuroda can't stay on for life. But I think my base case is still that they will be tweaking, but the speed of the tweaks and the amplitude of the changes in monetary policy may disappoint a few yen hawks. And I still think that that it's going to be slower than many may have expected. So the expectations for a move straight away at the end of this month on his first meeting, it's not my base case. What could be the case is that he starts to put in place discussions about what is possible to do. So the market will probably also react to those. But for the big moves, I think we will have to wait a little bit. Stelios, do you have any opinion on that one?
Not really. I mean, I agree with your point that UEDA
Yeah, UEFA.
is
Nice
not
one.
doesn't look like he's a big reformer, at least not yet. And why come in all guns blazing, right? And I guess you can expect pretty much for all central banks, continuity in what was done before, right? And it's very difficult to see nowadays. I think 20, 30, 40 years ago, it was more likely, but nowadays very difficult to see somebody diverging massively from the previous head. So, I really don't know much about the BOJ and the Japanese to really have an opinion, not like you guys, but it definitely doesn't look to me like he's going to be changing anything anytime soon.
Yeah.
So same
All right.
strategy. Yeah.
Okay, then moving on, we've had a few. Well, the employment trends index in the state came in actually weaker than expected and weaker than the prior one, which was already a downward revision. So then again, it puts us back into what happened prior to the NFP. But okay, this one is not really a big market mover. This being said, it came out around where the dollar was at its strongest yesterday, right? When we came in, which was around this time where the dollar printed its high yesterday when the States came online. So yeah, still it may have had a little effect on yesterday's events. Over to today, then we've had a pretty decent number on the UK retail sales monitor. Look, the sterling to me is still is still looking quite okay, if I may say. Yes, we've had this bounce from the low 87s if you look at the euro sterling, but the cable is made it back into the 124s pretty easily, in my opinion. So for the time being, I'm not really looking at being short sterling anywhere. I'm either looking at perhaps picking up some form of sterling in some way, and I'll look at a few of those sterling pairs once we're done with those with the data here. Further on, Chinese CPI coming off further. Dollar China is holding up pretty well, still trading 689. I don't know if well, that may have played a role. Also, the fact that the PBOC was out, some articles again about them continuing to inject liquidity into the system to try and prop up the economy, and then the geopolitics, of course, are keeping the CNY, CNH under the cush for now. Furthermore, Norwegian CPI came out, but it's not helping the Norwegian kroner at all. Euro NOK is trading above 11.50. That is weak. There's no other words. It's weak. Norwegian kroner is weak right now, and if ever oils would start to turn around, I don't see what's going to really prop it up right here and now. We also, on the other hand, we saw a steep drop in the PPI here, so that will have played a role as well. Moving on to the European Centix investor confidence, slightly better than, a bit better, still in negative territory. Retail sales, same, not as bad as what we may have expected. Revisions slightly better than prior. I must say the European data, all in all, whether it be the bigger one or the lesser ones, we have seen last week's German, construction data and also retail sales also, that were better than expected, at least. Yeah, the European data are not really falling out of bed right now, and I think that also supports the euro through the crosses as well. If not via the dollar, we're still hanging around 109 in the euro dollar. Right then, moving on, what have we got on the docket? Not a lot to move it around today, but then tomorrow, of course, as we've already said, CPI, and that's going to be the next big one for the US. A little afterwards, we are going to know what the Bank of Canada wants to do, and as we recall from last time, they kept their hands still. In the meantime, we've had a pretty decent labor report out of Canada, but will it be enough to force their hand? I'm not so sure. So I'm going to go with the majority here, and they are in pause. It would be, let's say, the surprise trade is a hike. Let's put it that way. Yeah, what else? Yeah, we've got, as I said, we've got those meetings ongoing. So we are going to have quite a few central bankers, finance ministers coming out speaking as well. So Bailey is speaking tomorrow evening. Watch out for the sterling, right? Usually when Bailey speaks, sterling dumps. But let's see. Last couple of interventions, he didn't manage to put it lower. And then on Thursday, we will have the Aussie labor report. It's going to be important. For one, the Aussie has been traded weaker, but overnight we've had slightly better numbers out, and it quite quickly moved a bit higher again. So it's going to be an important report, in my opinion. This, especially that the RBA doesn't really know what to do right now. So this may be a clincher for the next RBA report. So I'd say pay attention to this report. And then yeah, further down the week we will have IP. We will have CPIs coming out as well in the Euroland, and then the usual jobless claims. For the rest of the week, I'm not sure. I think then we move over. Yeah, we have the European CPIs on Friday as well. So there's going to be lots of data coming out and lots of events happening on the side as well. So I don't know whether it's going to be, we're going to break ranges, but at least enough to sink our teeth into to get some moves. Still, before I move on to
Yeah.
currencies, would you like to mention something else, or would you like to show something, or shall I just go ahead?
I have just one thing to mention about the Norwegian kroner, and like you mentioned, CPI came in line. Came in stronger than expected. We're expecting to a drop, and it came in higher. Interestingly, the PPI year-on-year number from this is obviously a volatile number because of the spike in inflation, right? We had PPI before let's say mid 2021 at normal levels. Let me just leave it at that. Then it went out, it was up jumped really aggressively after COVID and after Ukraine. Now we have minus 21.9% year on year, and this is the kind of numbers you really need to be seeing in order for us to say that we are attempting to go anywhere near back to normality. But anyway, what I was going to say about the kroner is that even though inflation beat, the kroner is under pressure, under a lot of pressure. You correctly said Euro Norway above 1150, and I've been talking about this for a while, and I'm aching to short this Euro Norway and dollar Norway. But firstly, the Norges Bank keeps selling kroner, every single day, and also I had a look at some. Can't remember which site it was with for sentiment, retail client sentiment, and pretty much everybody's short Euro Norway. So I think we're going to see a little bit of a squeeze on this. I've been saying before for dollar Norway, if we get anywhere near that previous high of 1085 or 1090, 1085 ish, I really want to sell that, but not just yet. And Euro Norway, I think with the way things are going now, I'm going to have to see 12 to start shorting. But this is a trade that makes a lot of sense. I mean, a lot of sense to be short, both Euro Norway and dollar Norway. But positioning and central bank action is just making it impossible at the moment. At least for me, I'm not pulling the trigger. I want to do that, but not yet. I'm going to let people know in the chat room when I do that.
Yeah. So we've had this OPEC plus move.
Yeah.
Here in the dollar Norway, and it's completely undone, and we're already shot far away. Even though, if you look at Brent, it's holding up, right? If you look at nat gas, it didn't really fall out of bed either. Although I think the European gas is trading at levels back of 2019 or even below. So yes, that is a negative factor then. But if you look at the Euro Norway, even on the OPEC plus, and I was hammering on about this level at 1120 in the Euro Norway, it did not manage to break below, and it took equally a day and a half to be already back above. And now we are shooting through. And if you look at those trend lines, there's a possibility that this goes to 1160, 1165 or and I don't know.
When there's so many.
Because if you look at this, we are actually not that far from the second spike in 2020. And that is not really normal. And I think there is a bit of Norges Bank in there. It's really absorbing a lot. We've had those waves of tax-related Norwegian kroner buying that we saw, and I think that was the last one, the last big one really we spoke about in August, September 2022. But since then it's gone a little bit quiet, but Norges Bank has then started to really sell Norwegian kroner, and they absorb every Noki that people want to buy. They seem to absorb enough of it right now, so that's left with negative data impacting or negative sentiment impacting the currency very, very quickly. I'm going to say I was on the defensive for the Norwegian kroner for a long time, but if we start to see those levels, I don't really know fundamentally why we should be trading above those April 2020 latest spikes. Even here, it would already have been enough in a way, looking at the prices of Brent and everything. It goes up to here. I don't know if I'm not going to say it's quite enough for now, you know. So another percent, 2%. I don't know. It's going to look a bit overdone for me, personally, at least.
I agree. And, you know, if you take away the COVID spike where nothing made any sense anywhere, this is going to be all-time highs if we break that high that you talked about. And on a macro level, with oil here, with the way things are run in Norway, with the way inflation is going, with the way employment is going, I mean, there's absolutely no reason for these pairs to be up there. So I think I'm with you on a, if we take out or if we reach that high there, that previous high before, so that's what, 1170 something. I was thinking 12 initially, but 12 might be a stretch. I'm going to start having a go. I mean, it makes no sense.
Yeah, if you want to purely trade trend lines, we should be selling around 1160, 1165, but I got a sneaky feeling that they are going to go for
Yeah.
a runaway trade, or the runaway that take out whatever stops there may be, and trade up in the 1170s. But then I'm really going to have a serious look at it. I mean, I don't see too many fundamental reasons. I mean, unemployment in Norwegian kroner is at levels where anyone else can only dream about.
Yeah, exactly.
Here, this level here, if they really go, I might start to give it a try in the longer term, really. But I might be looking at euro, maybe because of those data, and being the euro may not be the ideal one. Why not look at the dollar then, perhaps? So take another 2%, 10.56, so that's 10.75. That's here. Around 10.75 if we get a bit of a runaway train here. And then your danger zone is there, right? And if they put it back above here, or yeah, there could be a stretch to 11 actually. But yeah, let's look at what's going on in the next. I think it's not a trade where we have to be in a hurry to be in. Could be one for just starting to leg in. But yeah, I'm starting to get interested here.
Yeah.
All right.
I'll let you show a few things. I'll take the charts tomorrow maybe and show some of my.
Yeah, sure, mate. Sure.
Yeah.
I just need to update a bit because with the Easter weekend there, my charts are not all updated. But in the broader sense, anyway, if you look at the short end of the dollar rates, the 2-year, it's the 4%, right? We're still there. We've been talking about this 4.10, whatever. Enough. And now we're nearly there. We are 398. We are 4.10. That's where it plays ball. And I don't know if today is going to give us much to trade upon, but for sure tomorrow after the CPI, this is going to be a level that people will need to monitor. On the 10s, again, it hasn't been updated for a while, but anyway, we showed you that those levels just below here, below 330, 328, 327, we tried quickly below, but bounced again. Tomorrow it's all going to be the case of let's call it 3.25, 330 on the one hand, and 350s, 50, 58 on the other side. So you got 25, 30 BPs here, where the next direction is going to be decided or not. We could also just hang around in this range for a while. So, but that's really the range to observe. If we start to break again above this 358, call it last high, and this trend line also is not far from there, although it's been traversed quite a few times. But I think this is going to be an important level at 360 in the mix, perhaps. So 350, 360, 325, 330 on the downside in the US 10s. Then look at what happened in the metals. We have to go on a little bit tight. Yeah, smaller time frame here. Gold, a bit similar to the rest of the dollars, had to reprice a little bit after the NFPs, and we've moved back under 2K. Tried to break below the trend line, didn't close on the 4 hours below. So this trend line around 1987, 85 is still valid. This one here comes in as a secondary support, and then we've got more around in the 1970s again if it comes lower. But it's interesting that it held below 2K. Still a bit of an empty Monday, I would say, but it's interesting that we held right there, and we're coming back above 2K right now. I'd say what's that prior top? So we've got 1985. 2030, about 45, 50 bucks to play around, and in the middle we've got this 2010. If we continue to move higher, then of course we can't exclude to get back to the prior highs. But I think that's also going to be music for post CPI. Silver broken and held, and the secondary line around 24.5, which was the original one. Is the secondary line broken and held? We try to get back down to it, but it's holding. The prior high is holding. So that's your first zone again here. Pretty simple, 24.5. On the top side, where are we now? It's trading around 25 dead. So yeah, I think same thing here. Wait for tomorrow's CPI. I think that we could have some moves today. Everything moves all the time. But I'm not sure whether there's enough strength to start to tackle the next level around 25, 30, 35. So I'd rather observe a little bit of a range here. Moving into currencies, euro dollar really, I have very little positions in this euro dollar right now, and I was saying I think we are in a kind of a range building formation, which seems to be confirmed here around 109. So the support, this 108.30 showed up already a couple of times. So we had it again yesterday when the dollar did its high. Euro dollar as well came into this 108.30 support, and then moved back above 109. This trend line now is I think I'm going to kill it because it's not really holding back anything right now. The secondary one may show up again, 109.40 or so, which is not far from this last high. People are trying to call for some shampoo here, but I'm not sure whether that's even technically where we should be looking at. I'm really. Yeah, next one is really the US CPI. I do think that the euro is holding up relatively well, and we find it back. So we had this move higher in no, why am I here? Should have stayed on the same page. We had this jump back from those prior lows in the euro sterling, and we're now stabilizing around 87.70. We've seen it back in other euro crosses, like euro yen, for instance. Right, we have been trying above, failing, but now we're back above this trend line. We're still very hesitant to break prior tops here. But for as long as we are holding around this 144.75 in the short term, and perhaps 144 and the low 144s, I wouldn't rule out another test and perhaps a move finally back into the 146s. I don't know if it has much further to run. There's going to be a lot of speculation on the yen side of things, but if you look at it as a euro cross, it's doing pretty well. And if you look at, for instance, at what is happening on Euro Aussie, we're back trading around 164. We're back around the highs. This was a bit of a target zone for me around this 164. We also, but this trend line is rising now. It was around 164 earlier. It's now already around 164.5. But I don't know whether euro crosses are going to push through, but they are trading around lofty, around levels that don't signal weakness for the euro. Look at this, the euro kiwi. I thought after the RBNZ, the kiwi should have shown more strength, but it's failing to show too much strength, in my opinion. So I tried short euro kiwi around this line, and then after the data on Friday, bought some back when it came back to these lows around here on Friday. So my average was okay, but then today I just decided to step out of it. I'm got very little confidence in kiwi showing right now. So got out of the euro kiwi once it's tackled this zone again here, and don't feel too comfortable being short euros right now. But if you look at it as a channel, very interesting here. We are on the level, guys. We are trying to break prior levels, the prior high around 175.5, and we are on here. So if you get back below 175.20 for a starter, it may look a little bit as a failure here. So that's an interesting channel to keep an eye on. Aussie Kiwi. Right, I went out of it because and also was trying short there. I probably technically I shouldn't have, but the price action where I was trying to play the divergence between the RBA and the RBNZ is not really materializing. I think it should have stayed well into the 106s and actually traded lower already. But anyway, if you look at it as could be a little bit of a flag. There's this trend line that comes in around 107.35, 30.35. Then we have a fib here, 40. Then there's another level here around 48. This 35.50 is where Aussie Kiwi really should cap for having a chance to get back down. If we start to move again under 106, 70, 70, 70, 80, then there's probably more chance for moving lower. And as I said in the room, I stepped out of what I had, and I would prefer actually catching a break lower than trying to just catch tops in it. That for that one. I have to talk about the yen, right? After UEDA. So this trend line broke on UEDA yesterday, and we started to trade higher. But then, as people know, and I've been banging on about this level for a good while now, 133.80, 134, the figure. That's a big zone, and we stopped again yesterday right there. So I bought the UEDA comments, and I've moved out of it, but I'm still a little long euro yen. I've replaced it because I didn't trust the dollar up here. That was decent move, but we do have to respect this 133.80. Really, it's big enough to respect it. And as a matter of fact, if you look at the daily, and if you look at where the cloud is right now, the top of the cloud is also at well, it's a little bit above 134.13. So that's your probably, if you want to play against this 133.80 figure, keep this cloud in mind for a possible stop loss above also. The downside comes in where the trend line is right now, around 132.25 today. So there's your range. There's your range in dollar yen. I think it's a pretty clear range now to monitor or to trade if you feel like you want to trade yen. Opinions are divided. A lot of people are trying to counter this yen weakness. I'm still a bit on the other side, but I'm trying to choose my currency depending on my view in other stuff. And for the time being, I must say my view in the dollar is clouded at best. We'll look at the dollar Canada tomorrow, right? But deeper, I mean, ahead of the labor report over there. But we're turning around. We're turning around this zone. if you look at the width of this of what this little channel, however, or wedge, whatever you wanted to call it, we've roughly done it, and we've come to rest on the 134 support that we had here, and then it bounced. So I think this is going to be important tomorrow. 134. This is going to be the important zone, in my opinion, 134. And on the top side, I'd say 135.60. And if that would go on a very dovish Bank of Canada, that's going to be calling for 136 again. And then we'll have to decide what to do. For the time being, I'd call this a bit neutral here, where we are right now. That for the dollar CAD. I know a lot of people are looking at the yen crosses, so let's have a quick look at them. Kiwi yen. Well, it broke through the channel, then came. It even broke through the prior lows on the yen strength that we saw at the end of March, and then we tried to get back up to the top side of this triangle now, and failed here. So we are a bit in the middle of nowhere. Keep an eye on what's happening at 83.70. If ever we test back up there, first support should be around 82, and I don't have much in between, to be fair with you. CAD yen looking pretty similar, but there as well, these prior highs look to be capping the events right now. That's around 99.10. If you would go above, then we can talk about 100 again, 100, 100 and a quarter. But all this looks like very, very, very choppy to me in the medium term. As at least, I'm just overlooking from a bit of a distance right now. We have to get back below 97.60 to trade it lower again, in my opinion, and 97 ideally, and then the party will be over and we trade much lower, in my opinion. We've done the Noki, we've done the Aussie, we've done the Kiwi. Now, let's keep an eye on let's have a look on the dollar rand. That's put in an absolute monster reversal here from the South African Reserve Bank rate hike, a bigger rate hike than expected, came as a surprise. We went down to this support here, but then massively reversed. I haven't traded it myself. I know that people tried to pick the top here yesterday around this prior top, and it actually came back pretty hard. So that may be seen as a failure up here. So keep an eye again on what's happening again around 18.45, 18.15 the dollar rand. If ever we get back down to low 118s, I'm probably going to be looking at the other side again. I think this move is telling enough to say that the rand can't keep a beat for longer than a number of sessions right now. MEX, I don't have much to say. The 35.40, 1835.40 is going to be important again, and we're in the middle of the ballpark. 1790, 1795 to start with, then the bigger one around 1790. If that breaks, we are going back down. For the time being, I'm feeling more ranging this as well. Actually, my global dollar feeling is quite rangy for now, at least until tomorrow's CPI. I don't know if we're going to break anything at all today. So this is the dollar China again. I think for the reasons that I mentioned before, it's keeping the CNH on its toes, but we need to break above 691 to keep going. If we get back down below 688, which is not far, we could see it trade a little bit lower again. But for the time being, I'm really going to wait for either a break higher here or see what happens back much lower around 680. And that really sums it up. for me, yeah, we were talking about this S&P, and that's the last one I'm going to show for today. So to me, so this was the little spike that I traded on the on Wednesday, but it's again, we're trading in ranges, and it's coming back relatively easy back to this zone. So 41.40, 41.55, that's the really short-term one. And if that goes, then we are back at 4,200. On the underside, we need to get back under 40.70. But then there's going to be levels every 20, 25 points. 4K, there's a bit of a cluster of peeps and lines. So 4K, nice and round number. That's going to be the bigger number to watch in the S&P for now. And that is it. Stelios, anything more, or are we done?
No, that's all. We need to. Did you We need to potentially show Bitcoin, which is breaking out to the upside.
Ouch.
Yeah,
it
is breaking out. No problem, no problem.
You know, my bid is still in at $30. I'm not.
Well, it's 30K now. But yes, it's broken out of this like wedgie thing that it was doing, and it is an important level because as you had the chart before, if you scroll back, that 29.5 level was yeah, there you go. So in the May-June area where you are there, yep. I mean, that was a level of consolidation where we saw before that move down to 16K, and now it was a kind of a level. It is a level of consolidation before an upside. So I think this is now an important breakout. We need to see how it goes, and it is clearly correlated with risk as well. So, but you know, it is breaking out. So
yeah. Last word about risk, guys. Risk is a concept, right? If you look at some stuff, risk is doing well. If you look at other stuff, I mean, if you look, for instance, at what I was showing, and I'm going to show you two things which are completely opposite of one of each other. Look at Euro-Yen. It's bid. Euro-Yen, if you look at crosses, Euro-Yen bid is normally, or a weaker yen is normally positive risk, right? But then if you look at stuff like Euro-Aussie, Euro-Kiwi, they should actually come off because the commodity currencies, the antipodians, they are normally risk positive. They move with positive risk. They should move higher. And Euro-Kiwi is at its highest. If you look at Norwegian kroner, Scandis, they usually are risk correlated currencies as well. Norwegian kroner should be trading stronger, and it's trading weaker. So there's a lot to say about what should be trading in risk right now. If you look at it purely from, as Stelios was saying, the Bitcoin stand of view, it's very risk positive. If you look at the S&P, it's trading risk positive, but it's not working with all the FX pairs. So that's why I'm saying choose your currencies well if you want to trade risk in the FX sphere. Because even for me, being in the markets for 40+ years on a day-to-day basis, risk nowadays is not obvious to trade. It's really not obvious to trade. The correlations are random at best. So that was the last thing I wanted to say, because we are at the end of a max show here. Rest me to thank everybody for your presence again. We will be back tomorrow. Tomorrow is the last day for Stelios and myself in a duet. And from Thursday, our good friend Ryan should be back. So thanks all for listening. Thanks all for tuning in. Have a safe trading week. Try to navigate, try to surf the waves as best as can. Stelios, thanks as usual for your presence. And we call this a show.
Thank you, Cayman. Always a